Hi, this is Jake Birnberg with mistake number 3 of the 10 most expensive planning mistakes that cost business owners thousands of dollars every year. Mistake number 3 is having the wrong business entity. Most business owners start as sole proprietorships. Then as they grow, establish a limited liability company or corporation to help protect them from business liability. But choosing the right business entity involves all sorts of considerations as well. And many business owners are operating with entities that may have been appropriate when they were established, but just don't work as effectively now. I can't make you an expert on business entities, but I do want to walk you through one popular choice to illustrate how important this question can be. If you operate your business as a sole proprietorship or a single-member LLC taxed as a sole proprietorship, you may pay as much in self-employment tax as you do in income tax. And if that's the case, you might consider setting up an S corporation to reduce that tax. If you're taxed as a sole proprietor, you'll report your net income on Schedule C. You'll pay tax at whatever your personal rate is, but you'll also pay self-employment tax of 15.3% on your first $118,500 of net self-employment income, and 2.9% of anything above that. You'll also pay a new 0.9% surtax on any earned income over $200,000 if you're single, $250,000 if you're married filing jointly, or $125,000 if you're married filing separately. Let's say your profit at the end of the year is $80,000. You'll pay regular tax at your regular rate, whatever that is. You'll also pay about $11,000 in self-employment tax. The self-employment tax replaces the Social Security and Medicare tax that your employer would pay and withhold if you weren't self-employed. How many of you plan to retire on Social Security? An S corporation is a special corporation that's taxed like a partnership. The corporation pays you a reasonable wage for the work you do. If there's any profit left over, it passes through to you, and you pay the tax on that income on your own return. So the S corporation splits the owner's income into two parts, wages and pass-through distributions. Here's why the S corporation is so attractive. You'll pay the same 15.3% on tax on your wages as you would on your self-employment income, but there's no Social Security or self-employment tax due on the dividend pass-through. Let's say your corporation owns the same $80,000 as your proprietorship. If you pay yourself $40,000 in wages, you'll pay about $61.20 in Social Security, but you'll avoid employment tax on the income distribution, and that saves you $61.20 in employment taxes you would have paid without the S corporation. I hope you enjoyed the information on this video. I'm happy to talk to you about the specifics of your situation. There's no charge for an initial 30-minute tax analysis to see how many of your tax dollars we might recover. Thank you, and talk to you soon.